Whether you're just waking up midway through your trading session or winding down through the night, welcome. So on behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us in this global live stream session. So my name is Aidan and I'll be guiding you through this exciting 2-hour journey as your host. So today's live stream is not just a presentation, but it's a conversation, and it's dwindled into the engine room of one of the most fast-growing and forward-thinking funded trading funds in the industry. And of course, I am not here alone. I am joined by two remarkable guests who help shape what WeMasterTrade represent today: skilled traders, mentors, and role models within our community. So first, let me introduce the other composed, always insightful, Daisy. Welcome, Daisy.
Thank you so much, Aiden. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's sections. They know so much covers, not just about trading strategy or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just the fun trades, it's built trading.
Absolutely, and next to her is someone who brings sharp analysis and clarity to sharp and conversation. She's strategic, she's sharp, and she's a real force in the trading space. So please welcome Scarlett.
Thank you, Aidan, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me the most about today is that we're going to unpack everything, not just WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you ever have questions or even doubts, today is the day to ask them.
That's exactly what we're here for, whether you're brand new to WeMasterTrade or already a part of our Founder Trader program. Today's live stream is going to give you the full picture, not just the highlight reel. Over the course of this session, we're going to work you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and that's why we're doing things differently from traditional brokers or platforms. Now I want to be clear here, so this isn't just about sales, this is about understanding. We want you to know what you're signing up for, what kind of structure supports your journey, and how you can use that structure to not only succeed, but scale.
And speaking of structure, I'll begin by sharing the story behind WeMasterTrade, how it was formed as a funded project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built to the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from what the philosophy flow, everything we offer, especially our trading packets, we will be discussing in details. We will explain the logic behind each one, what kind of trader they are designed for, and how structure changes depending on whether you choose the challenge model or instant funding models. So if you have a look at our packets and talks, which one is right to me? Today we will answer that.
And more than that, we'll do a live comparison between packages. We'll break down pricings, account size, maximum loss, consistency rules, and even payout side by side to help you make a fully informed decision. It's one thing to see a number on the screen, but it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we'll move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We'll explain what the daily loss limit is and how it's calculated, why it includes both close and floating profit and loss, and how to avoid violating it, especially overnight. And we also go into the maximum total loss the consistency ratio, and will even address common misunderstandings about trade sizing and risk for trade policies.
And we won't just explain rule in isolations, we will explain them in the context of live trading decisions. I will share some personal examples of mistakes I make when I first start trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
And while we're on the topic of having you succeed, we're guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. So we've had some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what to do step by step.
From there, we'll transition into a discussion on our scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tier. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income as WeMasterTrade is through our profit-sharing models. This is the heart of what makes us different from platform. When you trade on the funding accounts and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just the percentage. We will explain the full payout cycle, threshold, and timeline today.
Now, I know many of you watching today aren't just traders, you're also educators, influencers, people with large network. So that's why we also take time to explain our affiliate program, and we'll do it transparently. We'll walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including the detailed explanations of the two-referee rule and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So as you can tell, this is not just a surface level live stream. We're diving into everything: packages, rules, promos, scale-up packs, profit sharing, and affiliate opportunities, all with one pivot in mind, helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop in the chat. Our moderation are watching, and we will answer as many questions as we can. Your voice is matters.
And if you're watching this on replay, don't worry, we'll leave timestamps and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about helping traders succeed.
So to wrap up this welcome, I'd like to say that WeMasterTrade is not just a platform, but it's a commitment to build rogue traders, to create a fair, structured, and scalable pathways for people around the world who are serious about trading active profession, not to gain. So if you're here to grow, to understand, and to take action, you're exactly where you need to be. So let's dive into the journey together. Let's begin once again. Welcome to the WeMasterTrade live stream. Okay, so thank you once again for being with us today. Before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is. what we believe in and why we built this platform the way we have. Because when you're putting your trust and your trading into a company, understanding its philosophy isn't just helpful, but it's essential. So this segment is also about origin, intentions, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to work through that, I'm joined as always and by two people who live and breathe these principles, Jesus and Scarlett. So let's start at the beginning.
Thanks, Aiden. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade were born with a purpose-driven mission to give capable traders access to capital regardless of their background, locations, or financial situations. We were founded in 2022 as part of the WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade builds its name on signal sharing, investor network, and copy trading techs, WeMasterTrade was designed to serve a more focused business to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding package to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap. You bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we invest heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently fund professional.
That academy is something special with real courses ranging from introductory trading psychology all the way to advanced risk calibration. So this multi-asset strategy, so the WeMasterTrade Academy isn't just about theory, but it's about implementation. So we have designed the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure that our system and content meets global standard, WeMasterTrade is proud to hold an ISO certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
And that certifications is a big deal because it shows our long-term commitment to develop traders, not just collecting fees. In an industry where many so-called platforms come and go, WeMasterTrade has positioned itself with a real operational stability, compliant frameworks, and internal accountabilities. We're not here to assist, we are here to build careers.
And we've seen that commitment translate into real stories. If you visit our testimonial page, you'll find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We had students from become full-time traders. We have women re-enter the finance world after career breaks, and we have young professionals from underbanked regions finally access to the market with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, We are maintaining a regularly updated blog section where our team of experts and educators share weekly insights, trading psychology breakdowns, market reactions, and platform updates. So we believe that learning never ends and that we keep our traders informed. But let's also talk about culture. What makes WeMasterTrade different isn't just the product it is offering, but it's a community mindset. So we actively promote trader integrity, respect for competition, and knowledge sharing. Whether you're in a Telegram group, watching YouTube series, or engaging with us on live support, you'd see that we actually listen.
And I will stick honestly here. In many platforms, the trader is just a customer. But we make the traders is the products. Your performance drives the business, and your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it is something we are proud of.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at our funded accounts, and connect with people who've gone through the system. The stories are real, the capital is real, and the results speak for themselves.
So to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education both trading institution. We are here to challenge the status of trading access, to build systems that reward performance over promotions, and to create real scalable income opportunities for traders around the world, regardless of their starting point. And this is more than a platform, it's a trading movement. And if you're ready to be a part of it, today's live stream will show you everything you need to know. So thank you Daisy and Scarlett for that deep and honest word through. So coming up next, we are going to take these foundations and connect this directly to our actual offering. So that means we'll be discussing the different account packages available at WeMasterTrade, how they differ, what they're designed for, and what kind of results you can expect from each. So now that we have explored who WeMasterTrade is and the principles that we stand for, it's time to move it into one of the most essential part of this live stream, an in-depth discussions on how account packages. This is where it's all begin for most traders choosing these stocks that best align with their goals, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about framework. So each package of WeMasterTrade represents a different pathway toward growth. And today we'll work you through all of them, what they offer, how they're structured, and most importantly, who they're designed for.
Exactly, Islands. As WeMasterTrade, we don't believe in a one-size-fits-all models. That's why we built two distinct product lines for traders, the challenge package and the instant funding package. Each client includes a variety of account size and configurations because we know that traders come with different strengths, risk appetites, and timelines.
Let's begin with the challenge model, the two-phase evaluation system built for traders who want to prove their skill before being allocated capital. It's structured, fair, and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In challenge models, you begin with a simulated account, and your goal is to match specific profit targets while staying within strict but reasonable risk parameters. There are 3 steps in total: phase 1, phase 2, and funded state.
So take instant for our $10,000 challenge account, a great starting point for traders who want to minimize upfront cost while building a track of record. So let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target, which is $800 without reaching a 5% daily drawdowns or 10% over loss limits, and you will have a limited time to achieve this. That's a key difference from many platforms. We don't pressure you with deadline.
Once you pass phase 1, you move to phase 2, where your profit target drops to 6%. That's $600. The risk rules remain the same. And here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed that target.
And finally, once both phases are clear, you enter the funded accounts where you trade with real capital and have no profit target. And your profit share jumped to 90%. That's one of the highest in the industries.
This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you're still refining your strategy or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
So now for those who are confident in this strategy and want to start with a launches account size, so with over 25,000, 50,000 and 100,000 challenge packages, the structure is actually quite similar. Two phases, the same 5% dailies and 10% total similar, but the profit targets scale proportionally.
For examples, in the $50,000 challenge, you will need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 1%, giving you a room to adjust position sizing.
The $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. If you already passed other broad challenges or have a strong verified trading history, this is a good setup.
So every challenge package comes with a one-time fee. For example, just $45 for the 10K challenge. So this fee is refundable once you become funded and meet minimum performance conditions. But if things don't go your way, you're eligible for a 50% reset discount to stop crash. But what if you don't want to go for a challenge at all, but instead want to access real capital immediately, earning a paid base purely on results on it, where our instant funding packages come into play?
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demo stays, just pure live trading, backed by structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, percentage, and goals. Today we're going to walk through each of 5 main instant funding packages: standards, 5, 10, 10, 5, 10 euros, 5, 10, 10 no PCs, and customized. We will compare the details, but more importantly, we will help you figure out which package is right for you.
So let me set the scene quickly. So all of our instant funding packages give you live trading access from day one. So that means no challenge phases, you evaluations, you pay once, follow the rules on your trading live capital, and every account, no matter the size, includes no time limits, up to 90% profit share, balance rate drawdown, scalp plan 2 of 1 million, support for EAs, swing trades, scalping, and even HFT. So now let's go package. So after we go Daisy Scholar, I want you to jump in with real advice who should really choose which one and what kind of traders you've seen succeed with each.
Let's start with the standard package. I always describe this one the best friend for traders who just want stability. You are getting up to $200,000 in capitals with a very manageable 4% daily loss limits and 6% overall drawdowns.
It's like that calm, steady account that doesn't push you to overtrade, and with the profit split up to 90%, there's serious earning potential even if you're taking a slow and steady approach.
And how about commissions?
Competitive across the board is forex at $4 per lot, gold at $4 per lot, indices at $1, and stock at just 0.079 per lot.
And everything is allowed: news trading, escaping, weekend holding, EAs, HFT, you name it.
So for the audience, if you're someone who trades regularly, understand your strategy on the full range of assets and plans to escape the long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to stretch with a target-based challenge. And if you have ever had an account down due to unrealistic rules, you'll find the standard model refreshingly fair.
I would also say it suits swing traders. The 4-6% risk profile gives just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
So moving over gear, let's talk about the 5-10-10 package. Same capital ceiling up to 200k balance. But now you get a 5% daily loss and a wider 10% overall limit. So why does that matter?
The extra cushion is massive for traders who scale into positions or take multiple entries per setup. You got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which align well with the risk window. Plus, you will still get the full support for scalping. Is a new trading is a very trader friendly.
And this is best for day traders, especially those trading assets like a Nasdaq or gold that move fast. If you got a tested intraday strategy and just need some risk breathing room, this is your package.
And also for traders who just want structures but don't mind having that profit targets, the clear milestone motivates some people, especially if they are payout oriented.
So now here's a personal favorite, the 5-10-0. So you get 5% dailies and 10% overall loss, but
Consistency over space. If that you will try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their home.
so now for the rule breakers, or rather those who don't want to be evaluated and not even their proprietor, the 5-10-10 PC removes consistency tracking, right?
Exactly, same 5-10 risk profile, but you're not required to keep your profit growth smooth. One big win day is totally fine.
The sets trade copiers are not allowed in this one, so this is for manual trader only, and you need to trade responsibly. But for aggressive trader who sometimes hits big spikes, this is the place.
And it's perfect for high risk reward traders or anyone who had issues with consistency rules at other firms. You trade how you want, just keep it inside the drawdown box.
And last but not least, a customized package. So this is WeMasterTrade saying, you know, what you need, let's build it together.
You can adjust daily loss overlap to your liking. Plus, you can fund up to $400,000 more than any other accounts.
It's premium, flexible, and comes with all trading styles allowed, including EA, news trading, weekend holding, HFT, and more. And the top tier, and this package is ideal for top tier professionals, ex-hedge fund traders, signal provider, high volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say, if your choice are the model and nothing quite fit, build your own blueprints with customized. The freedom is rare.
So to sum up, every instant funding package we offer comes with clear risk parameters, fair commission, deep market access, and real profit potential. There are no long time limits, and payout starts as early as 1 day in.
And no matter your strategies, capping, swings, overs or manual, there's account that's aligned with you. The key is picking the right ones now, so you can start trades building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
So up next, we will walk you through exactly how to protect your account, avoid breaches, and understand the key risk and consistency rules that power our entire platform. So stay tuned. This is WeMasterTrade, where real capital meets your strategy.
Trade.
Alright traders, another you've seen the packages. So let's talk about the part that either make or break your account. That's right, it's time to dig into the trading rules on how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account, it's come down to one thing, the daily loss limit.
Yes, the dreaded day loss is the one rule traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Thursday.
But here's the good news: once you understand how it works, really works, it's become one of your best tools for risk controls. So today, let's break it down from top to the bottom.
So what is a daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you're allowed to incur in both floatings and call trades on any single trading days. If your equity falls below that limit, even for the moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what strips a lot of traders up.
So let's work through a live example. Imagine at the start of day 5, your balance is 105,000. Your equity, however, is higher at 107,000 because of open floating profit.
If you're on 4% daily loss limits, we calculate it of a higher number, $107,000.
So 4% of $107,000 is $4,000. That means your equity for the rest of that day can drop below $102,000, or boom, the account is gone.
So, right, I think it's important to point this out. The system isn't waiting for a close, it's real time. So even if your trade is floating loss and you haven't closed yet, you're equity deep below that threshold, but even a second, that's it.
Now let's reverse it. Say it's the start of day 7. Your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since the balance is higher, we base the 4% on the individual balance, so it's a $4,000.
So now your equity must stay above 96,003 at a day. If it drops at 95,999, auto liquidation kicks in, no warning, no margin call.
The system will send a market order to close all trades, everything liquidates. Your account is disabled and you can't trade again unless you purchase a new package.
And here's the kicker: the auto close happens when the system detects the thresholds were crossed, but due to the market fluctuation, your final profits and loss might look worse than the actual threshold. That's because the system executed closures based on the price slippage at the time of liquidation.
So if you only intend to take like a 3,900 loss, one slippage spikes in gold or natural as early as 4,200, that's when we say don't run yet.
Alright, let's talk about how to avoid violating this rule, because this is where the broke mindset kicks in.
The first step is know your book first. Never plan trade to take you right up to the edge of your limits. Leave at least 10 to 15% room below the max loss, especially in a volatile in the market.
Tip 2. Check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you're heading toward a violation.
Tip 3. Use a dashboard or a tracker. Inside WeMasterTrade will provide risk dashboard that shows you live drawdown styles. Use them, check them, don't rely on your memory.
And also support trading after a big loss early in the day. If you lost 3% in the first hour of London sections, maybe it's time to stop and reflect, not try to revenge trades your ways back up.
Another big one, trade smaller during news hours. If you're trading gold during NFP with full loss size, you're practically begging to break the daily loss rule, cut position size, and report volatility.
So what are the top breaking mistakes you see when it comes to daily loss?
Number one is over leveraging. Traders open these positions that are 5, 6, 7% of their account, thinking they will close quickly. But if traders turn red fast, it's already too late.
Number two, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 pip gap, the daily loss could be hit you before you even open your eyes.
And the third, assuming they close trades are all that matter, they're not. Remember, equities include both floating and closed positions, so the total equity line is your score.
And I always say this to new traders, the daily loss rules isn't at your enemies, it's at your account's airbus. It's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you'll last longer than 90% of the market.
And one last note, it isn't just about rule, it's about trust. So we personally found you because we trust you that you'll manage risk responsibly. So the daily loss is there to protect that trust on both sides. So now we are moving from the daily boundary to the absolute boundary, and I'm talking about the maximum loss rule, so also known as your account stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is why a lot of traders misunderstand how the rule works. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they will chip away their accounts and suddenly it's a liquidation.
The last loss rule is the last safety net. If the big loss is your daily seatbelt, then last loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is a max loss rule? Let's define it simply. It's the total maximum amount you're allowed to lose across all trades for the entire account. If your equity, that is your real-time capital, including open trades, ever drop below a certain percentage of your starting balance, your account is gone, period.
And unlike daily loss week reset every day, this one doesn't reset, it's accumulated. You can lose the 2% one day, 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your package is typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
So let's work through a concrete example. Suppose you have an instant money account with an initial balance of $50,000 and your max loss limit is 6%, which is $3,000.
This means your equity can never go below $47,000 ever. Doesn't matter if you miss $1,000 every day. The total loss from the highest point paid down to the threshold what matters.
And remember, this rule includes both closed losses and floating losses. So if you lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800. That's below the limit. Account closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stands in real time relative to that stop loss floor.
Here's where it gets interesting and a little tricky. Let's say your account grows to $51,000. Congrats, you're in the profit.
But your max loss limit is still based on your original $50,000 starting balance, so if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly, you have 4,000 in total buffer because 51,000 minus 47,000 equals 4,000. So your profit gives you cushion, but then the floor never moves.
And what happens when you break it? Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at the market price.
And again, aligns with daily loss. If there are volatilities or slippage, your accounts might close out below deadlines. That's just execution reality.
And most importantly, once it's breached and the account is permanently disabled, you need to purchase a new package if you want to continue trading. No seat reset, no rollback.
And alright, let's get tactical. How do you actually trade inside this room without constantly worrying about it?
First, check your total close losses every day. You should always know how close to your max lot floor. Don't wait for the dashboard warnings, calculate it manually.
Second, use your profits as protection, not permission. Don't treat flowing profit as a great light to increase risk. Instead, consider locking in gains by reducing loss size when you're ahead.
Third, manage your floating target aggressively. Even if you're positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
And fourth is stay cool when you are close. If you are down 5% out of your 6% limits, that's not the time to double down. That's the time to step away, pause, and retain your time.
And for the biggest mistake, underestimating floating drawdown. Traders close 3 loser and think, okay, I still got room, but they forget about the fourth trade floating minus $1,800.
And secondly, traders who chase recoveries after a bad day, they lose 4% in one day, come back with swinging the next day, thinking they will make it back, and instead take another 2% and boom, violations.
Third, and this one hurts, ignoring slippage during major news. Even with a high stop, new candles can gap you straight through your limit.
And the max loss rules is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful traders I know see their stop loss, whether personal or institutional, as a non-negotiable boundaries.
Right is a reality check. If you're consistently pushing up against your max loss, the problem isn't the rule. The problem is your system or your psychology.
So at WeMasterTrade, we're not just giving capital, we're teaching structure, and the max loss rule is what separates gamblers from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance, and it includes both close and floating losses, and once breached, your account is gone. So coming up next, we'll explore the consistency rules and why steady profit matters more than big spikes when it comes to growing, scaling, and getting paid.
If you ever make $5,000 in one day, then make $200 in the next 4 days, and wonder why your payout not got flagged, this next segment is for you.
And let's dive into the reasons of profitability, how to stay consistent under WeMasterTrade model.
So stay with us. This is the WeMasterTrade live stream where structure meets opportunity. Alright traders, so we have talked about the daily loss limit and we have just covered the maximum loss rule, two pillars of protecting your capital, but now it's time to shift gears just a little and talk not about risk but about results. Because here things is not just about staying alive in the game. At WeMasterTrade we want to see traders grow, scale and can actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
And this really right here. The profit consistency rules is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you are just hoping to hit one big winner and roll the dice.
And more importantly is also how we evaluate if a trader is eligible for withdrawals, profit sharing, or even scale up. So if you're funded and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define clearly the profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio. The less consistent, meaning you had one giant profit day and then smaller or losing day, the higher your ratio.
The idea is simple. If 80% of your total profit come from the one day, not consistencies, that's loss or risk. What we want to see is a trader who make profits day after day, even if it's more. That's what we can scale.
And how is it calculated? The formula is really straightforward. Take your best trading day profits and divide it by your overall profit since you started the account, then multiply by 100.
So the best day divided by total profit multiplied 100 equals your profit consistency.
And just to be clear, best day refer to your highest close profit in a single calendar days, and total profits is the sum of all your close profits minus any close losses or open losses across the life of the accounts.
Let's say you had the following results over 5 trading days. Day 1 get lost $100, day 2 $200, day 3 minus $50, and day 4 plus $100, and day 5 plus $60.
And that means your total net profits across the 5 days is 100 plus 200 minus 15 plus 100 and plus 16 equal $410.
So your best day profit is day 2, that's $200 in profit.
So now we apply the formula. $200 divide $410, multiply that by 100, and you will get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency with e-commerce. These traders is way above that, so they wouldn't qualify for payout yet.
So even though this trader is profitable, they're not consistent enough. They have one big day that made up almost half of their total profit. That's not sustainable, and that's what we're looking at.
And this is where I really want to speak to traders. If you are relying one or two big days to carry your entire accounts, that's not a professional trading. That your volatilities, and you can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scale up, who get fitters, who get trust with more capital.
Alright, so let's address the number. What an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. And how to improve your consistency? So let's say you're over the limit, don't panic. You're not disqualified. You just need to keep trading and even out the curve.
And here's how to do that. First one, trade smaller size for a few days. Second, take smaller controls wins for 200 and $300 days. The third is avoid big swing trader that could spike your retro gains. And the last one is spread profit across multiple days, not one month success.
And for those using EA to manage your equity curve, if your EA is going profitability until one day, you might need to rebalance it. The bot might think it's profitable, but it won't pass this through unless it's configured with payout logic in mind.
And a common mistake to avoid is step 1, traders hitting target early, then taking the rest of the week off. That inflates your best day and leaves the rest of your curve flat.
The mistake 2 is overtrading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out at that high retro.
Mistake 3, thinking this rule is just a huddle. It's not, it's a reflection of what we actually look for in our master traders.
And at the end of the day, this isn't about controlling use, it's about building habits that can handle scale. If you can't be consistent with $25,000, what's happened when give you $100,000 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade with fund traders, but we also study them. This rule tells us whether you're serious about long-term trading.
And we've seen it in time and time again. The traders who respect this rule, they're the ones who get multiple payouts, referrals, and grow into six-figure funding account.
So don't fear the rule. Understand that use it as a feedback tool. If your ratio is too high, great. That means you got profit now. Keep going. Balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your static tab.
So to recap, this rule is about balance, not volume, and to keep your best day under 20% of your total profit, spread your wins across multiple sessions and manage your progress in a dashboard. So we have worked through the daily loss limit, tackle the maximum loss, and examine how profit consistency shape your long-term payouts and growth. And now we arrive at the final and perhaps I believe it is most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right, traders often think the biggest enemies is the markets, but truthfully it's inconsistent, especially in how much you are risking from one trade to the next.
This rule doesn't look at how often you win. It looks at how stable your risk is and how professionally you're managing your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down at its core. The risk consistency rules is simple. You're not allowed to risk more than 2% of your initial account balance in any single trade idea.
And that includes all losses associated with that trade ideas, both closed losses and floating losses, even fees, commissions, and swap accounts.
And for some accounts like the 510 novice package, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
So because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that will make you hard to scale.
These rules protect both you and the firm. It helps preserve capitals, prevent loss, equity swings, and make you sure your ads play out over time.
Think of it as your account heartbeat. If your position size pulls up and down, 0.5 loss one day, 5 loss the next, the system flexes. That's not structure, that's chaos.
So this is where it gets technical, but stay with us. The term's trade idea isn't just one order, it's a group of trades that share the same logic.
And if you open 3 buy positions on AUUSD goals at different times, and you close them within 3 minutes of each other, that's one trade idea.
Because it's the same symbol, same direction, and close around the same time, even if you open them at different times. They're seen as a single, undefined position from a risk perspective.
So the system doesn't look at your trades in isolation, it groups them into logical bundles and applies 2% rules across the entire bundle.
And you can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP, GPY, and short on AUD, USD, and each position has its own distinct direction and assets. Those are 3 separate trade ideas, and each one can risk up to 2%.
So let's say you go buy gold and buy again. You have 3 open positions in the same directions on the same asset.
Yep, the system treats that as one trade idea. So if the combined floating risk or even true loss from those positions exceed 2% of your starting balance, boom, you've broken the rule.
And another mistake is opening multiple gold buys, then closing once 10 minutes later and 2 others together. The system still group trades close within 3 minutes of each other, so be mindful of your close timings.
So let's go hands-on. Suppose you have a 100,000 account. The 2% net risk per trade idea means that you can't lose more than 2,000 on any trade idea at all.
So you open 2 gold buys, 1 loss each. You don't place a stop loss. New hits market drop 100 pips. X lot lose $1,000. That $2,000 total.
You're right on the line. If slippage or swap as a few extra dollars, that's it. Rule broken, account flagged or liquidated, depending on enforcement model.
So on some accounts, especially the instant money account with stricter tolerance, this breach may result in lots of undisturbed or immediate closure.
And pro tips to stay risk consistent. Tip 1, set your stop loss size based on account risk, not emotion. Know how many pips equal to percent.
And the tip 2 is use stop loss order rigorously. Set them based on risk per trade ideas, not random chart level.
Tip 3, don't start trades without calculating combined risk. Because one position is below 2% doesn't mean 3 of them are.
Tip 4, label your trade ideas mentally. If you're entering on the same setup, treat it as one, size it accordingly.
And tip 5, if you want to split an idea into multiple choice, do it smart. Scale in smaller, you micro lots if needed, and keep the total exposures below 2%.
The most common reason traders break this rule, stacking multiple entries on one trade idea thinking is still separate.
And the 7th one is opening high-risk trades after win, assuming they are playing with house money. Spoilers, markets doesn't care.
Through neglecting closing drawdown, a trade may not be closed, but the closing that still counts toward your 2% risk.
And it isn't just policies, it's a professional practice. Hedge fund follow this, bank follow this, and real trader follow it.
Exactly, we're not here to micromanage you. We're here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk is the foundations of scalable capital, those are the ones that we grow. Those are the traders who go from $25,000 to $1 million account.
And if you want to be a professional trader, you have to think like one. And professional traders always knows how much they are risking on every trade every day.
And if you're still guessing your loss side or opening trades because the setup feels right, take this as your sign, step it up, get structure.
This is more than a rule, it's a habit. Build it now and the path to a bigger capital and larger payouts become way more predictable. And that, my friend, wraps up the 4 essential rules of trading at WeMasterTrade. These include daily loss, maximum loss, profit consistency, and risk consistency. So master these and you're not just staying compliant, you're building a foundation for serious capital management, long-term payouts, and scaling. So you are watching the WeMasterTrade official live stream and the best is yet to come. So this is it, you've made it through the risk rule, the profit conditions and structures of your account. So now let's talk why it's all worth it, because at the end of the day we know that every trader really won.
More capitals, more room to trade, bigger loss, higher rewards, without ever putting your own money at risk.
And that's exactly what the WeMasterTrade Scale-Up Plan is built to provide. This is your roadmap from being a small account trader to managing a $1 million funded account. And it's not fantastic, it is a clear path with defined milestone.
So the Scale-Up Plan is our performance-based program as you trade well, meaning you hit your target, avoid violations, and demonstrate risk control. We increase your capital allocation. In other words, you earn more room to trade without sweating more out of the pocket.
And let's be clear, it isn't tied to subscriptions, models, or gimmicks. You don't pay for scale-up, you earn it through consistency, profits, and it is flying.
And the scaling is aggressive. We're talking doubling, tripling, and eventually scaling you all the way to $1 million in funded capital, depending on where you start.
So at WeMasterTrade, we offer 2 types of scale plans depending on your account type, which is 1% based scaling, mostly used for channel accounts. The second is amount-based scaling used in instant funding accounts, say the 10K, 25K, 50K, and beyond.
And let's start with the percentage-based plans. You begin as an evaluation trader level 1 with 100% of your base account. Hit the 20% profit target with profit consistencies, and you are promoted to level 2, where your capital increase by 50%.
From there, the growth explodes. Level 3, 300%. Level 4, 100%. Level 5, 1,002. 200%, level 6, 2,400%, and finally mass $1 million.
And for each level, you don't just need to hit the profit target, you also need to complete at least 2 payout cycles so the system knows that you're not just performing, you're stable.
And now for instant funding accounts, the scale up with set dollar targets, and the plans adjust depending on your individual funded size.
Let's take the 10,000 funded trader as an example. Here's how the levels look. Level 1, $10,000. Level 2, $15,000. Level 3, $30,000. Level 4, $60,000. Level 5, $120,000. Level 6, $240,000. Level 7, $480,000. Level 8, $960,000. And level 9, $1 million.
So each step has its own profit target, usually 10 to 20%, and some levels require profit consistency. especially in the early stages. Once you've beyond level 3 or level 4, the consistency requirement drops and it's all about raw performance and discipline.
And if you start with a $25,000 account, your first profit target is $5,000. Hit that with consistency, you've bumped up to $57,500, then $75,000 and $115,000 all the way to $1 million.
And don't worry, you don't lose your account if you don't hit that target fast. There are no time limits. You grow at your own pace as long as you stay within the rules.
So, to move to the next level here, what you need to do, reach the specified profit target, avoid all violations, especially MAT loss or daily loss, complete at least 2 successful payouts, maintain profit consistency if required for that state. And I have to sorry if I want to cut you right here, so now it's time to get into the economic analysis of today's news calendar.
Well, the first news is about the GBP periods. Well, GBDB came in at minus 0.3% and minus 0.1% forecast and medium list. Other data like manufacturing minus 0.9% and industrial production minus 0.6% also disappointed. Only construction output beat expectation plus 0.9%. Overall weak UK data equal to GBP periods. The next one is USD noted bullish. 10-year bond yield rose to 4.42%, equal to USD supportive. Federal budget deeper and deficit minus 316 billion, limited forex impact. High impact data at 8:30 p.m. PPI, core PPI unemployment claims watch for volatility. Until then, USD holds steady. The next one is about GBY periods. BSI manufacturing index at minus 4.8 to a 0.8 forecast. This is a big sentiment drop. Weak confident GBY periods. The next one is AUD mildly bullish. Inflation expectation jumps to 5%. River is 4.1%. Could pressure RBA. So the AUD mildly bullish. The euro slightly positive. Italian unemployment down to 6% from 6.1%. It has small improvement, so euro slightly bullish. That is the end of the news.
So thank you, Scarlett, for such a detailed explanations of today's economic calendar, and thank you also audience for joining us today. We hope that this session has been informative and that you are as excited about the opportunities here at WeMasterTrade as we are. So remember to like, subscribe, and share the live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events, and we look forward to seeing you again soon. Until next time, happy trading.
you.